Hey everybody, welcome. Thank you so much for joining. My name is Matthew. Today I'm going to show you the best Bitcoin valuation model you've never heard of. So what we're going to do in this episode is I'm going to put together the metrics that I've covered in the last few videos in the last week, and I'm going to show you it in a way that I haven't seen done before, frankly. And actually, it's funny. The first time I published this metric and analysis surrounding this metric was on January 9th, 2017, during the launch of my original website, my cryptovoices.com website for my podcast and some research. You see here that the only access that I have to that is via the Wayback Machine. But you can see here that this was a metric that I had on my website. And yes, that was the launch of that website, the Crypto Voices podcast, 9th of January 2017, 8 full years after Satoshi Nakamoto released the Bitcoin client software to the world. And it took me about 6 years to realize this stuff is just better produced and the information is just easier to educate on via video. So that's what I'm doing here now, about 6 years later. But I have talked about this metric quite a bit over the years for those of you that have been following me. This has some elements of the traditional financial industry, but you have to prepare the data in a specific way to make it work for the Bitcoin industry. And the ratio is very simple. The top of the ratio, the numerator, is the Bitcoin market cap. You see it right here. This is a curve that pretty much everybody knows. What this is, again, is simply the Bitcoin supply curve expressed in US dollar terms. So how many Bitcoins have been issued, mined, produced by the protocol cumulatively every 10 minutes since the Genesis block of the 3rd of January 2009. Slap a US dollar price any day during the course of the past 14 years or so, and you will arrive at the market cap, and that is this figure here. So that is the Bitcoin market cap. We have been as low as $0 million. First time we hit 1 million, remember, was late 2010. And I am tracking my first dollar price from Bitcoin Pizza Day, May 22nd, 2010, when Laszlo made his famous transaction, which someone had to do. And again, not the first barter transaction in Bitcoin's history, but you get the point. And of course, it's been as high in 2021 as over $1 trillion. Let's see if we can zoom in here. 1.27, close to 1.3 trillion dollars in market cap. So that's the numerator. And this is a ratio, remember, so there's going to be a denominator. What is the denominator? Well, you have to very specifically compile the data. And as we've talked about a few videos ago, the best way to do that when you look at any economic data, frankly, but for Bitcoin, it makes even more sense, is you look at these things on a trailing 12-month basis or a trailing 365-day basis. I'll explain the ratio in a second a bit more, but the denominator, as you can see in the subtitle there, is trailing 12-month TTM network revenue. So what does that look like? We talked about this. What does it look like? Let's put it here in, it's going to be a darker shade of green. Did you see it? Can you see it? Very, very small relative to the market cap. It's denoted by the little pickaxe here. Remember, this is in million, 1,000 million is a billion, and a million is a trillion. So as I just mentioned, we got to $1.3 trillion in market cap in November 2021. So the revenue for miners was also at an all-time high about that time. It got to, on a trailing 12-month basis, $15+ billion, close to, actually did hit 16 billion, close to $17 billion, right about here. This is trailing 12-month miner network revenue. Again, what does that comprise of? Two things: the scarce block reward, which comes every 10 minutes, And the amount of Bitcoins in that block reward halves every 4 years or every 210,000 blocks, plus transaction fees, which miners, those that have been awarded the next block in the blockchain, the transactions that they have collected into that block and the respective transaction fees also are awarded to that miner. So that's network revenue. Trailing 12-month miner revenue, network revenue. It's the total revenue that the Bitcoin blockchain pays to miners. It's the scarce resource that miners are fighting for every 10 minutes. And the ratio is very simply, you put those two things together. The market cap, which is the lighter green area, and the darker green area, which is trailing 12-month network revenue. Divide the larger number by the smaller number, and you will get a ratio. And before I put the ratio on the chart, I just want to say a couple more things about what it means. PSR is what I'm going to call it here, or price to sales, you see in the title. This ratio is as old as the hills as far as finance goes. When you have a valuation of anything, be it a farm, real estate, company, you have a market value that participants in the market are willing to pay for, and then you have revenue that farm or company or resource can yield. And in this respect, even assets which we say typically don't have an income actually do. So gold, for example, gold just sits there in a vault. It doesn't pay you interest. It doesn't pay a dividend. But if you look at gold from the perspective of the mining industry, the nature of how the gold comes out of the ground, there is revenue there in the gold market. And as I've talked about in prior videos, it's about $200 billion a year. A massive amount of number compared to the Bitcoin revenue, which, as we see here, topped out at close to $17 billion a year here in February 2022. That's what we want to get to. We want to get to an actual figure that links, that unites, that's the bridge between the Bitcoin market cap in US dollar terms, which is the world's reserve currency and the best way to look at this stuff for now, as far as value in Bitcoin, and what miners are actually fighting for when they are mining and securing and producing blocks and including transactions into the Bitcoin network. What are they fighting for? They're fighting for revenue. That is, at the moment, 900 Bitcoins per day, or 6.25 Bitcoins per block, as you see here after the third halving. Before that, it was 12.5 per block. Before that, 25. And then from the Genesis block, for those first 4 years, it was 50 Bitcoins per block. So you need to link these two things. That's the nature of this ratio. And that can show you whether the market capitalization itself may be overvalued or undervalued relative to the trailing 12-month revenue in the same US dollar terms that miners are fighting for and miners collect on a gross basis. I hasten to say again, of course, as I've always said, this is not financial advice. Some people choose to just hodl Bitcoin. Some people choose to trade Bitcoin. Some people choose to trade scam coins in an effort to accumulate more Bitcoin. Some people choose to mine Bitcoin. Some people choose to invest in Bitcoin miners. Caveat emptor, do what you need to do. But this ratio, which I'm about to show you, is a very, very powerful ratio that can unite, it can link the market cap to the trailing 12-month revenue of miners. So having said all of that, I'm going to show you the ratio right now. And here it is. So it's in black, and it's on the right axis, denoted by this little industrial building here. And it goes up and it goes down, and understanding this can help us a little bit more understand where we are in the cycle. So let's zoom in just a little bit here. Again, this is the Bitcoin market cap divided by trailing 12-month revenue. So my USD data starts on Bitcoin Pizza Day, May 22nd, 2010. That means by May 21st, 2011, I will have my first full year of data for miner revenue. Again, which compiles and is comprised of the block reward plus fees. At that time, miners were fighting for $3 million worth of revenue. As we talked about in prior videos, over a trailing 12-month basis, the market cap was $41 million. Divide the top number by the bottom number, you get the PSR, the price to sales ratio of 16.5x. You see we had our first top here in June 2011 when the Bitcoin price spiked to $30, the first Mt. Gox hacking, or empty Gox hacking is the better way to say it. And then we went down and we actually hit the all-time low of this ratio, where you can see here just by zoomed in, this is still linear scale. We were going down from June 2011. The market cap now is falling quite rapidly relative to miner revenue over a trailing 365-day basis, to where you get to this point here in November 2011. The Bitcoin price is only a few dollars at the moment here. The market cap is $18 million, and the Bitcoin trailing 12-month miner or network revenue is also $18 million equivalent over the last 365 days. That's a PSR of 1. And here's probably a good time to say something about the general financial world. PSR is not PE. Price to earnings ratio, that's a very famous, also as old as the hills, valuation metric in financial markets. That includes expenses. That's going to take the stock price. Usually they look at it on a per share basis. So you take the stock price divided by the earnings per share. And you're going to get a multiple, which typically throughout history has ranged between 10 and 20. Let's say 15 would be the all-time average, 15x. But again, that is very different from here because that includes expenses. That is after expenses. It's also not the perfect ratio because it's not the dividend yield. Dividend yield is reflecting cash balances. Cash is a fact. As one of my favorite accounting statements, cash is a fact. Earnings are an opinion. So accountants can definitely make things seem higher or lower due to tax reasons or the financial reasons. Nonetheless, let's not get too much into that. This is slightly different. This is the price to sales ratio. It's just gross revenue that we're looking at. And the market cap divided by that gross revenue will give us the price to sales ratio. And this won't be the last video for sure that I talk about this, but it's going to help to show the Bitcoin price, layer the Bitcoin price on here. But for now, just think of the Bitcoin price kind of as the market cap. It's very, very similar to the price action, but I'm still going to show you the actual core metrics that are used to calculate this ratio. So we have in 2013, 2 booms here. The price went up to like $200 per Bitcoin, then fell back to 60. And then the price went to $1,300 per Bitcoin and fell down from there into the crypto winter. So you see, looking at the price to sales ratio here of 72, how is that calculated? Well, the Bitcoin market cap at the time was $2.6 billion, 2,600 million, divided by what miners were fighting for in a trailing 12-month basis there. Every day, if you calculated those Bitcoins, both in block reward and transaction fees into dollar terms over a rolling 365-day basis, $36 million. Take the top number, divide it by the bottom number, you get 72.8x. And that is an all-time high at the time. We match it again a little bit lower actually in 2013. And then we go down from there into the crypto winter. Notice the depths of the crypto winter here. We never get close again to 1 relatively. We kind of do, I guess. You're getting down to 4, 3.9, 3. But we're not even in the neighborhood of 1x. We never do again, by the way. So that's an interesting thing to keep in mind, as we had there in 2011. Then we see the ratio start to build up again. After the second halving, we get the activation of SegWit here in the summer of 2017. We actually have 3 little tops in this metric to the actual final blow-off top of 2017, where the market cap at its peak on a day close basis, December 16th, $330 billion, roughly. The revenue that miners were fighting for on a trailing 12-month basis, $2.8 billion. You take the top number, divide it by the bottom number. That is a PSR of 118.4x. Okay, so here was signaling pretty rare air, and here was signaling that perhaps the market cap is a little bit ahead. It's a little bit over its skis compared to what miners make on a trailing 12-month basis. Gross, what they make in gross terms. To reset the zoom again, we go down, down, down. We have this major sell-off here in November of 2018, where we were $5,000, $6,000 Bitcoin. We go down to 3 here, November, December, January 2018. PSR falls again. Now it falls down to a level of about 9 at its lowest. Okay, then we go up again. We have a little boom here in 2019, then COVID, we fall again. And during the COVID scare, big drop in Bitcoin's price. Went down again to about 3,000, if I recall correctly. Again, I will layer on price in future videos here. But the market cap shows you the action. We go to a market cap of $90 billion. And that is quite low at the moment in the prior few months there of 2020, where we were at $180 billion market cap. But the trailing 12-month revenue, of course, doesn't experience those swings. It doesn't experience that volatility. It smooths it out. So we were always around $5.5 billion worth of miner revenue during this period. But then when you see where the market cap went relative to the revenue, it was quite low. Again, 15.5x. And then, of course, we had the COVID boom, which we've talked about. Now, this is interesting because the first peak we can see was really signaled here during the first part of 2021. We see that we went back up to just very, very quickly all-time highs in the market cap. We went to $1 trillion, $1 trillion here on the chart. But at the time, look at Bitcoin miner revenue on a trailing 12-month basis, not much higher than when we looked at it a year prior, $6.2 billion. So divide those two numbers, find the ratio, we're up to 170x or thereabout as far as a PSR ratio for the Bitcoin network. That was the highest that it had ever been. And then, interestingly, we did go to this double top here in market cap and in price, but because we had caught up a little bit with revenue, the revenue is now higher. Revenue is doubled on a trailing 12-month basis here in October. Let's zoom in again. Actually, let's catch both tops. So we see that the revenue here is still $5, $6, $7 billion at the start of 2021. By the end of 2021, we've caught all of this price appreciation, so the revenue is a little bit higher. It's smoothed out to a higher level to give us a more dampened or softened ratio relative to, again, a $1 trillion plus market cap. So here, $1.2 trillion market cap. Now we have double, actually triple the Bitcoin miner revenue on a trailing 12-month basis, about 15.5 billion. And again, this runs trailing 12 months. So we see that we go all the way to February 2022, where it tops out the revenue at $16.8 billion. And that's where we've been. And then we have fallen. Of course, the scam coin blowout of second half of 2022, culminating in the FTX debacle of November 2022, rose back up a little bit here again today. But we see that perhaps this was a bottom, perhaps. The PSR has told us that we're at 26x, 27x, and now we've risen back up again to close to 50x. So there's a lot more to say about this. You will notice, by the way, that this ratio keeps growing. There's a trend to it that goes up. You see that, right? So the top here was 42x, then we went to 70x, right? In 2013, then we went to 100 and what was the actual top? 120x in 2017. And then, of course, we went to 170 some X in 2021. So the tops are higher and the lows are also higher. We've never been as low of a PSR at 1 as we have at the end of 2011. We've never again hit that level of where the actual revenue in dollar terms that miners fight for equals the market cap. And typically in basic financial valuation, again, as you may or may not know, when your revenues equal your total market cap, it's possible that you are quite undervalued at this point. Again, I hasten to say this is gross revenue. You got to factor in expenses. There are lots of things to factor in here. And of course, this is just an academic calculation, right? I mean, I'm not showing you for sure here what proportion of miners hodled Bitcoins during these lows or sold them during the highs. We can back into those numbers for sure in other analysis, but that's not shown here. All we are doing are showing the USD trailing 12-month value of what miners are fighting for, of those scarce blocks, those scarce Bitcoins, and those transaction fees that they can be paid if they win the next block. Nonetheless, the trend we see keeps rising. So this is something to keep an eye on, and I will show more about that in the next video, how the trend might affect the relative values of the PSR at each stage. And we'll also look at log scale on the next video as well. So that's it. That is the Bitcoin price to sales ratio, market cap divided by trailing 12-month revenue. I think you're only going to see this here, at least this level of analysis so far. I hope you like it. Please let me know if you do. Thanks a lot for watching.